Hey, good evening, everyone. This is Sam, and I'll be doing the free video for March 5th, 2021. So we had a crazy week this week. Lots of volatility. We started the week up 3%, and then it dropped 2%, and then it popped then it dropped another 2%, and then another 2%, and now it's today it closed very well. I think by and large, some things ended up on the week, some things ended down. Very, very volatile week, punctuated yesterday by Powell letting the market down by not saying the magic words that the market wanted to hear involving the bond market. So that issue still remains unresolved. Because of that and because of the positioning of the indices, broadly speaking, I still think that being very cautious going into next week is primarily the way to approach the market. We had a hell of a day today, but I also want to remind you that we had a hell of a day on Monday, and it ended up rolling over and really causing a lot of volatility. So going into next week, I do expect the volatility to continue. I'm not overly positive on the market necessarily, but from what I looked at, a lot of things are somewhat in balance, meaning that it could really go either way. It just depends on how we open on Monday and how we close. There were a couple of sectors that looked pretty good to me, primarily XLC, which is communications. So if XLC looks good, then what is the biggest component of XLC? It's actually Google. So the reason probably that XLC looks so good is because Google looks so good. So I still think there's some opportunities out there, assuming that everything holds up in terms of the broader indices. I'm going to show you Google here, which is a very, very bullish chart, and then I'm going to juxtapose that with the dollar, which I think is setting up as somewhat of a potentially bearish catalyst for the next, let's call it 2 weeks or so. So you got to be able to hold two ideas in your head going into next week. One is there's a couple of pockets of very, very strong stocks. XLC, XLE, XLF, XLI, XLB. But then there's some pockets of stuff that doesn't look very good, like XLY. The semiconductors took a big hit. Technology took a big hit. So you got to be able to hold two ideas in your head going into next week. The best trades, the best directional trades happen when everything's in line and everything's singing together. And I just don't see that going into next week. So let's dive into Google here, which is a bullish chart, and then I'm going to show you the dollar, which can potentially cause some problems. And so we want to see how these things develop, not just into next week, but for the next 2 weeks going into the Fed meeting on the 16th to the 17th. So what am I looking at here on Google? Well, primarily on the daily chart. The weekly chart is 100% structured. Nothing wrong with it. Gets just a check there, holding all structure, holding the lows. Good looking weekly. Nothing wrong with it. The daily, however, it does now have a daily squeeze here. Now, we always want to look at squeezes in context. You don't just want to assume they're going to go higher, but this is one of the better looking ones that I see because the pullback here, given the totality of the chaos this week in the markets, especially in big tech, you can see that Google got through it pretty much unscathed. And not only did it come out unscathed, it actually closed significantly better than last week, or the last 2 days, I should say. And it did it on very big very big volume, which you can see is somewhat of a confirmation of the move. So in terms of stocks that look very good here, Google's pretty high on the list. Holding the box, this is a pretty classic pattern here. Letting the squeeze flatten out, which is another pretty classic pattern. Holding all the lows here, which is just very nice as well. Big volume, like we said, and then 195-minute squeeze with an upward bias. So let's just run a quick Fibonacci retracement here, just to see exactly where the potential target to the upside would be in Google. And it gives me support right around 86 to about 68. So let's go ahead and just clean this up a little bit. I'm going to take off the 786. And the upper target here on Google would be right around 2187 with an upper target of 618 at 2240. So 2187 followed by 2240 would be the upside targets here in Google, assuming that the pattern plays out to the upside. Definitely one of the better looking charts in the market and just held up this week like a total champ. So that's the bull side of it. let me show you the somewhat bearish argument here, and that is going to be the dollar. So equities love when the dollar goes lower because anything priced in dollars, if the dollar depreciates in value, it pushes the appearance of prices higher, right? So the simple answer, the simple way to approach it is just a lower dollar helps equities, a higher dollar may hurt equities. And I am seeing some potential reversal patterns here in the dollar. So a couple things here that to note. One, you can't really reverse this quickly because you had such a severe downtrend for so long in the dollar. But what you can do is kind of rock it back and forth and turn the moving averages, right? And that's what we've been watching now for about 2 weeks, and they're certainly starting to turn. You see how the 50 went from slicing in like a knife to actually kind of turning and cradling here price, and now price is actually starting to follow the moving averages when it didn't care about them before. That's the sign of a potential bottom here. You have this low, and then you have a higher low, right? So you essentially have a double bottom with a higher low in place, which is very bullish. And then if you project across, you can see that it's actually starting to break out. It also has a daily squeeze with an upward bias. And if you look at the 195 minute, you see how it's starting to actually respect the moving averages. This is the first step from transitioning from sideways or choppy markets into trend. And if you're an equity bull, you really don't want to see this trend higher because it hurts the story of continued upside in the equity markets in the short term. If you look at over here on the 2-day chart, and I'm just showing you a 2-day chart just because, well, actually, you know what? Let me show you a 3-day chart because that one's a little bit even more conclusive, I believe. So what's been the pattern here on the 3-day chart? Well, by and large, it hasn't ever tested the 50, not once. And then by and large, it's been holding roughly around the 21 as resistance. You see that? It doesn't ever have two closes above the 21. It got above it there, couldn't finish the job, got above it here, couldn't finish the job, got above it here, couldn't finish the job, and now you actually have the big close above. You see how price was made a low there, and then you made a lower low, but you see how your indicator made that low and then made a higher low? So your price went down while your indicator went up. That's called a price divergence and can be the precursor to a pretty big move. And then lastly, you see how you have a 3-day squeeze here as well? So squeezes usually go about 8 to 10 bars, and on a 3-day chart that would imply roughly about 24 to 30 days of potential upside pressure on the dollar. So very strong signals here on the dollar in terms of reversal. I don't think this is going to reverse the trend. I don't think that the dollar is going to go to new highs from this. It could just be kind of a test of this falling 200, and then that's it. But any upward pressure in the dollar will not be necessarily read positively by equities is my expectation. So you got a good pick in Google, in my opinion. If the stock market goes up, I think that's where you want to put your money. And you also have the other bearish side of the argument, which is the dollar. So going into next week, I personally am expecting a little bit of downside because of the bond issue that I was mentioning at the beginning of the video, but it's not overly clear. And when it's not overly clear, you want to do a couple of things. You either want to trade faster or you want to trade smaller size so that you don't get hurt in a non-clear market. So again, Google looks great, and also understand the relationship around the dollar and how that can affect equities. And we'll see how we open on Monday and how we trade from there. All right, guys, that's the video. I hope it was helpful. If you like what we do here in terms of the videos, come and check us out at simplertrading.com. Try us out for a trial, or stop by the room and say hello. Also, if you like the videos that we've been putting out on YouTube, don't forget to subscribe and also give us a like or a dislike. We don't mind. You can leave us a dislike if you like, but just let us know you are here in some way, right? So don't just stop by and watch the videos. If you do, subscribe. If you do watch the videos, leave us a comment. Let us know that we suck or that we don't suck. It's good either way. Just leave some footprints while you're here. We like talking to you guys, and we like building the community. So interaction helps us do that, and you guys are a big part of that. So thanks for stopping by, and we'll see you next week. Cheers.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me